Okay, we got the inflation numbers. As you can see, we expected 2.5% inflation. We got 2.4% inflation, which means that the inflation numbers were a beat. The core CPI 2.8 versus an estimated 3%. Big question, if the CPI numbers were such a big beat, then why are the markets still 2.56% down on the S&P? Why is Bitcoin still down $1,000 on the day? I'm going to look at exactly why. I'm going to show you why the markets aren't responding to the CPI data, as you can see. And then I want to talk a little bit about this tweet from Trump, because yesterday, when Trump told us it was a good time to buy, it was a very good time to buy. The markets went up 10%, one of the biggest gains that the markets have ever had. And now he says there are more great days coming. Does that mean that we have a license to buy? Does that mean that Trump has guaranteed us a pump? Trump has guaranteed us a pump for the next 90 days. I'm good like that, bro. Well, that's what we're going to be talking about today. And then I want to look at some crypto tokens that are running, not running, and potentially good buying opportunities. So if that sounds good to you, you know what to do. Obliterate the like button. Let's get straight on the road, guys. GM, especially if you're in the United States. GM, good morning, 𝗦𝗁𝗐𝗐𝗐, rise and shine. We just had the CPI numbers. Good CPI numbers, no effect on the market, unfortunately. We did have a beat on CPI, as you can see. And I think what's more interesting or what's more exciting about this beat on CPI is that, as you can see over here, the rate at which CPI is dropping is pretty fast, right? We had a couple of months where CPI was increasing. We had 4 months where CPI increased 2.6, 2.7, 2.9 to 3. Then we had a drop from 3% to 2.8%. And now we've got a drop to 2.4%. What makes it a lot more exciting is the fact that if you look over here, Trueflation is calling inflation at 1.34% and actually very, very, very much on the decline. At the same time, if you look at the oil prices, which are one of the big drivers of CPI, whether it's in production or deliveries or whatever else, you can see that the oil prices, because of Trump's shenanigans in the last couple of days, because of the tariff wars and everything else, we are going to see a bit of a slowdown here. So net, when you look at CPI, you got to remember that CPI is very much a lagging indicator. The Fed is using historical data to make a decision, and the Fed is looking for a 2% inflation. Now, I would say that given this economic data that we've got at the moment, given the 2.4% CPI, coupled with what Trueflation is saying and what the oil prices are doing, I would say that if the Fed doesn't believe that we're getting to 2% on CPI, then the Fed may actually really be caught ahead of the curve. And I think that what Trump did in the last couple of days and weeks, which will filter into the CPI data in probably not a month, 2 months from now, 8 weeks from now. So the reading will be the one 12 weeks from now. That will really push the CPI numbers down. So a good CPI number, but unable to push the markets up. Look at the markets. The markets are like red, bad, minus 2.59% on the S&P 500. Let's go into the bubbles. Josh, I must say, I'm really falling in love with the stock bubbles. I got to be honest, they're actually an absolute pleasure to use. I must say, really good. You can see today, NVIDIA down 4.6%, Apple down 5%, Tesla down 4.7%. So you can see that what's going on in the stocks. Crypto, everything is green. Stocks, everything's red. How does that happen? Are the bubbles broken? If you look at stocks, all the stocks are red and all the crypto are up. Either crypto is having a fantastic day or it was really low yesterday. One of the two. Anyway, let's go back into it. So, by the way, if you haven't already obliterated the like button, obliterate the like button. For those of you who don't know what the word obliterate means, you can chat GPT it, or I can just Google it for you. Obliterate. Here we go. And what obliterate means is to utterly destroy or to wipe out the like button. So look at your computer, and if you still see a like button, it means that you haven't utterly destroyed the like button. So just keep obliterating the like button. I just got a text from Vinny Lingham. Let's just see what he says. He keeps watching the shows. He's an avid watcher of the shows. He says, why is the daring soul too short this rip for a small give back tomorrow on Friday? Give me okay, so he's saying we're going to short this. Let's talk about actually what's going on here. So Yesterday, we had a massive pump in the market. $5.5 trillion added to the stock market. By all accounts, the best day that we had in the stock market in a long time. You can see what happened yesterday. And that was because Trump, obviously, for those of you who missed what happened yesterday, Trump effectively gave a 90-day pause on tariffs. And then he said on China, he raised the tariffs to 125%. And now the big question is, why is it that with all of that, the markets are not actually pumping? Yesterday was a great day, though. I must say it was amazing. I think what's even more amazing is that we had the president of the country saying it's a great time to buy, and then 3 hours later, the markets absolutely pump. Now, I mean, we need to talk about this because remember a few days ago, like Trump was saying, we're not even looking at the stock market. Like we don't even really care about the stock market. This is not about the stock market. And the whole narrative from the White House was, we don't really care, and we're not looking at the markets. Now, not only are they looking at the markets, but they're actually telling us exactly when to buy the markets. So the whole narrative has absolutely changed in Washington. From we're not looking at the markets to please buy the markets. This is a great time to buy the markets. It's a crazy change of narrative in a very short period of time. And so when Trump said that, I suppose when the president who controls the country and runs the country tells you to buy the market, I think you need to buy the market because the markets did go up 9.52% on the S&P. The NASDAQ, 12.6%, 12.16%. That is, the biggest gain ever occurred in 2001, which was amazing. The Dow was up 2,962 points, the largest one-day rally in history. And also what you can see here, which is kind of good, is you can say there have now been 12 days with over 1,000-point gains in history, and President Trump has 10 of them. It just shows that he is such a volatile president. I love it, right? I used to have a reputation for dating volatile women. So like for me, it's like I'm kind of used to volatility, right? And that's why I went to crypto afterwards. And now that's why I like Trump. But you can see that he is the volatile guy. Like he's the one he's the one that has the biggest pumps. And probably if this guy, Ryan Detrick, did the biggest dumps, I think Trump would probably be somewhere in the biggest pumps and the biggest dumps. So they went from not looking at the crypto markets at all to actually being big fans of the market. Listen to what he said.
When you see what happened today, I don't know if it's still there. I looked an hour ago, but...
I looked an hour ago. So we went from, we're not looking at the markets to, I looked an hour ago.
Close to 3,000 points. Nobody's ever seen a day like that. I think
nobody's ever seen a day like that.
Fellas?
Definitely.
Is that a record? Who would have thought we were going to have a record like that after watching? But because the geniuses of the world, they get it. When you see what happened today.
So he's gone from not looking at the markets to looking at the markets an hour ago and looking to break records on the markets. I fucking love this guy. The reason why I love this guy, I get him. One of my business mentors, actually, funny enough, really had the same personality as Trump. Now, truth is, I was one of his suppliers, and I used to hate the guy. As a supplier, imagine working with this guy. One day he cuts your contract, he imposes tariffs on you, and then, but by the end of it, when you actually get it, and you get that a lot of it is about like ego masturbation and just telling him how good he is and how amazing he is and how many records he has and blah, blah, blah. Then he seems to like you. And, Trump, I get this guy, which is why I think I'm trading Trump so well. He said that, he said that, it's not over yet. The markets are going to continue to pump. And I don't know if this is true or not true, but there was a lot of insider buying. So maybe, I don't know, maybe the Trump family is buying. I don't know. Someone seems to be doing a lot of insider buying. They were bought for 85 cents. This is QQQ options. They bought for 85 cents and ran to $31 per contract. This was before any news. Later on in the day, it rallied 2,000% in 10 minutes. These guys are masters, bro. These guys are absolute masters. The show is definitely going to be removed from YouTube soon, and I'm going to be removed too. And all right, so I'll tell you why the markets aren't actually moving. So the obvious reason why the markets aren't actually moving, and you've got to be realistic here, is that the markets moved up 10% yesterday. And a lot of that 10% was shorts being absolutely obliterated, right? So when you get a pump like that, generally what happens is there's a lot of people that were short. There's a lot of people that thought that the markets were going to continue to go down. Those guys got so badly squeezed last night that if you closed your eyes, you could actually hear their pain. You could just hear how they got squeezed yesterday. And the narrative that Wall Street is adopting is that, hey, this is all part of the plan, guys. This is all part of the plan. And they're saying basically that, it wasn't really the T-bill rates spiking that caused them to do a U-turn. In fact, one of the economics advisors, Hassett, said the bond market may have contributed to the tariff decision, but didn't cause panic, right? So the narrative, the real narrative out there is, or the narrative that Trump and everyone is saying is that this was all the art of the deal.
Many of you in the media clearly missed the art of the deal. You clearly failed to see what President Trump is doing.
Now, you know that when the press, when the spokesperson for the president says something like that, you know that is the narrative that they're starting to drive now. The narrative that Wall Street, that Scott Bessent came out with and said, I spoke to Trump last Sunday, and he said this was part of his deal. And now they're looking at the media and they're going, you guys all missed the fact that this was the art of the deal. No. That's not what happened. What happened was that something went wrong and they had to correct courses very quickly. And I think that Trump actually admitted it when he spoke to the media yesterday. Someone asked him.
Credibility, Mike, because you said that these tariffs would go in effect on Monday. You said no pause. And today there is a pause. So how can people believe your words today?
It's not a question of that. You have to have flexibility. I could say, here's a wall, and I'm going to go through that wall. I'm going to go through it no matter what, and keep going, and you can't go through the wall. Sometimes you have to be able to go under the wall, around the wall, or over the wall. These guys know that better than anybody, right? You got to go around them sometimes. You're not going to go through.
So you see what I'm saying?
So I consider,
so Trump's narrative is, look, we changed our narrative, and I think that's one of the reasons why the market aren't responding. Number one, we had a pump and there was a short squeeze, and now the markets are going to start coming down. Number two, I think the market is starting to realize that Trump actually capitulated in this game of chicken between China and the United States. I think a lot of people are starting to realize that actually, despite the brave face and the strong narrative that Wall Street or that Washington is actually putting on, it's pretty clear to anyone out there, or pretty clear to a lot of us, that what actually happened was that this plan has actually gone wrong. Jason Calacanis, he's been saying this a while. It was obvious to everyone that Trump would fold. Sorry to crush all your adversaries with his brilliant art of the deal, making of the art of the deal. You've got a lot of these. Peter Schiff saying pausing the so-called reciprocal tariffs was not a win. It was an admission of defeat. And I must say, I think that there is a lot of truth to that. The other thing is, net, Trump didn't actually pause tariffs. He reduced tariffs to 10% blanket and 125% to China, which means that the average tariff, as pointed out by Bloomberg, is now 24% from what was 27%. So it's not really, when you look at it on a net. And you can kind of see that the market's absorbing this news, and that now the markets are actually starting to come down quite a bit. S&P is down 3%. Bitcoin is back down at 81. Solana is just holding above 110. So I think that the market is starting to realize this, and I think all the short selling has now pretty much stopped. All the short squeeze has pretty much stopped. But let's talk about the actual pump. So let's talk about the actual pump. So the rest of the world had a very, very, very good day. So if you look at all the indices, so the US is down, but if you look at the rest of the world, yes, the DAX is up 5%, the FTSE is up 4%, CAC is up 4%, the Eurostock's up 4%. You know what I've realized? I've realized we're talking a lot more about stocks on the show than we used to. Like, we hardly talk crypto anymore. We'll talk a lot of crypto at the end. How about that? Let me know in the comments if you guys are enjoying this macro stocks coverage and if we should include it a lot more. Anyway, as you can see, most of the countries that had tariffs against them and now got the 90-day reprieve are basically up. I would imagine China slightly up or maybe down 0.86%. Okay, so yeah, most of the things are down. US down quite a bit. The US down quite a bit. As Vinny says, he says there may be an actual pullback, and it would be quite a gift if it was. And again, I think right now you need to be watching this chart. You need to be watching the US 10-year Treasury, because this is actually the only chart that actually matters at the moment. we need to see this rate come down to get the interest rates dropping. And I think that what's actually happened here is actually something pretty interesting. I think that, sometimes think about it like a war, and think about you go to war and you start shooting your ammunition and you realize that the effect that you wanted to have isn't actually happening. Now, you got two options. You can carry on fighting the war, or what you can go and do is you can go back and you can reload. And I think that that's what's happening here. I think what Trump wanted to do with the stock market crash was he wanted to crash the 10-year treasury yield. But then China fought back unexpectedly, or maybe expectedly. And then what they did was they completely shifted the narrative, reversed the tariffs. And now they're trying to get the markets up again so that they could hit it again and see if they can reduce the 10-year again. I think that if the problem is that if you look at the last correction, the S&P, or this one that just happened, was 21%. Now, with a 21% base down, if they would have carried on fighting, you got to ask yourself, how much lower would the markets have actually gone? I mean, I think it would be a bit too dangerous. And so what they've done is they've said, look, we tried something that didn't work. As he said, Trump kind of admitted, he said, look, we tried something, we went for the wall, then we decided we're actually going around the wall. It didn't work. We're going to go back, we're going to regroup, we're going to let the markets pump for 90 days. And then once the markets have got stability again, we will rethink our strategy and redeploy a new strategy. And that's what I think is basically going on here. And so I think Trump's plan now is pump the markets for the next 90 days. That's what I think. Now, the question is, will he be able to convince the market? And I think the one thing that the markets haven't priced in yet is some kind of deal with China. And I think that that's the next thing that's going to happen. I think between now and the next 90 days, there's going to be a contingent either sent to China or a Chinese contingent sent to the United States. By the way, it's a very, very, very important thing in negotiation. And funny enough, one of my negotiations lecturers when I was at Harvard actually lectured, or actually helped the government in these types of negotiations. And one of the things you got to look out for is, where are they going to hold the negotiations? So they could hold the negotiations in the United States, but that would mean that the negotiations are on the US's home turf. Now, it's like a football team. On your home turf, you seem to play better. You seem to be more comfortable, right? They could go to China, but that would be admitting defeat. So already they're going in weak. Or they could meet somewhere central. And when I say somewhere central, somewhere where they both don't have allies. Now, the question is, where would they meet then? I mean, it could be Singapore, but Singapore is, maybe you could argue, more aligned to China. So we've got to look out for that. But what I think the market hasn't priced in, I agree with Joe McCann here, is I don't believe the market has priced in a China deal yet. And I think that the next thing on the cards is, we know the 70 countries actually phoned, or Trump says they're phoned. But I do think that Bill Ackman is right here when he says that there's a concept called short-term inelastic, long-term elastic. Now, when I say that, let me just explain to you what I mean. So the concept of being inelastic or elastic means how flexible you are in the short term and in the long term. So, look, for example, today, the United States is short-term inelastic on iPhone manufacturing, because in the short term, there's no one that can take over the iPhone manufacturing that the United States needs. But in the long term, it's pretty elastic, because if you can move it to Vietnam or India or whatever else, right? So think about it like this. In the short term, what China knows that in the short term, the US can't move their supply chains, because it's just impossible to set up all the supply chains that they need. But they can start negotiating and start signing deals to move supply chains. So, for example, if Vietnam go and do a deal right now with the United States, then as part of that deal, the United States can guarantee them that they're going to move certain production to Vietnam. Now, if that happens, then China are going to lose that production in the long term, right? So that's the concept of being short-term inelastic and then long-term elastic, long-term pretty flexible. So think about it like this. The more time China takes to go and negotiate, because China is the net exporter here, because more US consumed goods are produced in China. China is under pressure to conclude a deal quickly. And the US, one of the US's big tools here is that they can start negotiating and publicizing deals that they're doing with countries. So look out for that, because that is a negotiating tactic. What they're going to do is they're going to start announcing deals that they've done with other countries. Hey, we've done a deal with Vietnam. Vietnam dropped all their tariffs, and in return, they're going to be buying US beef, and we're going to be moving iPhone production to Vietnam. That is what you're going to be looking out for. That is all negotiating tactics with China. The perception that the US wants to create here is they want to create the perception with China. Guys, if you don't negotiate with us, we're going to move all our manufacturing to all your adversaries or all your competitors, and we're not going to keep any manufacturing in China. So look out for that, because that's something that's going to start happening. I do think that the one thing that isn't priced in is, hey, the US is going to meet China to talk. Now, when they meet, you know how Trump is. It was a very, very productive meeting, and we agreed on a lot of things. It was a fabulous, fabulous, fabulous meeting. That's exactly what's going to happen, right? And that's, so look out for that. And I think that that's going to be the next rally in this market. That's the next rally in this market. So let's talk about the rally in the market, because Trump's pretty much told us there's going to be a rally in the market, or at least he's told us that he's gone from, I'm not watching the market, to there's going to be a rally in the market. And to me, I think that if Trump is telling you to buy the market, then you should just listen to him and you should buy the market, to be honest. Because this is not Eric Trump. This is not like Eric Trump tweeting, hey guys, good time to buy ETH. This is big Trump. This is Papa Trump. Papa Trump has basically said, buy the markets. He says, what a day, but more great days are coming. That's pretty much what he said. He's done this before, actually. This was a clip from, believe it or not, 2008. With no sound. Absolutely no sound.
Yes, I do. Very talented guy, very smart person.
What about the Fed chair? Who's the Fed chair?
Well, we'll see. They're raising interest rates too fast. That's my opinion, but I certainly have confidence. But I think it'll straighten. They're raising interest rates too fast because they think the economy is so good. But I think that they will get it pretty soon. I really do. I mean, the fact is that the economy is doing so well that they raised interest rates, and that's as a form of safety, in a way. President Obama didn't do much of that. Much easier to run when you have no interest rate. He had a very low interest rate. We have a normalized interest rate. A normalized interest rate means a lot. You know, it's good for a lot of people. They have money in the bank, they get interest on their money. For many years, nobody got interest on their money. So, but I have great confidence in them. I have great confidence in our companies. We have companies the greatest in the world, and they're doing really well. They have record kinds of numbers. So I think it's a tremendous opportunity to buy.
This was in
really
December
a great
2018 when Trump said it was a tremendous time to buy. That's exactly when it was. And look what happened to the markets. The markets basically shot up. It took 120 days for the markets to actually recover. This is a chart of the S&P 500. That was the day when Trump actually spoke about that. So for me, if Trump tells me the markets are going to pump, I think I'd be dumb to discount him. Now, do I think that everything is over? So let's look at a couple of things. Number one, when I look at the S&P 500, and I just look at like very basic indicators, RSI is down. Look at the last couple of times that the RSIs were that low. So there was a pump here. The RSIs were down. There was a pump back here. Again, the RSI is pretty low, pump over here. So the RSIs for me are quite low, and that for me indicates that it might be a good time to actually buy. Any kind of dips that you get here, probably a good time to actually buy. Another thing which I'm looking at is I'm looking at the 𝗙𝗫. Okay, you know that when the 𝗙𝗫 weakens, risk assets should be running. But the problem is that we've had so much turmoil that risk assets have been dropping while the 𝗙𝗫 has been dropping. When the turmoil subsides and the 𝗙𝗫 stops dropping, then you're going to get some kind of repricing. You have to have a repricing, right? And you can see the 𝗙𝗫 is now hitting quite key levels. Like if we drop below the $100, that's the 100. That's quite a big number. So the next thing is I just look at S&P corrections. So generally, I mean, let's go back. We didn't need to go, the researchers, because they did a lot of work today. And they went all the way back to 1957. Imagine that. They went all the way back to 1957. Wow. Man. No wonder that there was nothing in the show doc. You guys were busy working on this chart. So, long story short, you can see that when you look at S&P corrections, recent S&P corrections, so barring COVID, which was 35%, this was 21, 26, 14, 22. This one was 2008. This one was quite brutal. But remember, 2001 and 2008, these corrections were not man-made. These were like something broke like crazy. Someone says Rand went to Harvard. Yeah, bro, believe it or not, bro. There's a lot you don't know about me. Unrivaled says, notice he didn't say not financial advice. Bro, yeah, someone should talk to Trump and say, if you're going to post like now's a good time to buy the market. You need to stay in brackets. This is not financial advice. Anyway, so I think we've had quite a reasonable correction. And I also look at other indicators. Like I look at Bitcoin relative to the VIX. So Bitcoin relative to, you can't say scaredity. You can say fear. Scaredity, fear. Fear in the stock markets. And you can see that it's hit this trend line. So if you believe that kind of voodoo, then I think it might actually work. And then Raoul Paul just pointing out this M2 money supply thing. I actually think one day this will actually be right, to be honest. I think it'll actually get it right. Look, that said, we do need to keep our eyes open in case this is a bear trap, a bull trap. Would this be a bear trap or a bull? It would be a bear trap. Right, Josh? Like this bounce would be a bear trap, eh? A bull trap. So this could be a bull trap, right? Why? Because the third best day since 1990, note that most of the best days were actually bear market rallies. Now, let's talk about a bear market rally. Bear market rallies don't usually last 1 or 2 days. In fact, bear market rallies can last for months. Like you can have a down and you can have an up and you can have a down, an up, then you can have another down. So let's look out for that. I think in the short term, markets go up. I think in the long term, I think there might be a lot of pain. We can look at bear market rallies, but we'll evaluate that when that happens. Today marked the second largest single day in NASDAQ history, 3 top spots, plus 14.7, plus 12, plus 11.81. In both other instances, the NASDAQ landed up making a new low. So it can happen. You can have a bear rally. Yeah, that's it for me. I think I'm starting to buy a little bit more aggressively. I'm buying mainly stocks at the moment because, as you know, I'm fully deployed in crypto. I do want to talk a little bit about crypto. There's a token that launched today called Babylon Chain. So for those of you who don't know what Babylon Chain, effectively, it allows you to stake Bitcoin to secure other proof of stake chains. That's pretty much what it does. This is a long anticipated launch, and people thought this would launch at billions of dollars, and it launched at $890 million fully diluted market cap. Just shows you the state of the market. Terrible, terrible, terrible launch relative to what should have happened. The stuff that I am buying is the stuff that I showed you yesterday. And again, why? Because it's the stuff that I know the most about, and it's the stuff that, like, I'm pretty comfortable buying Coinbase when the markets go down. I'm pretty comfortable buying leveraged Bitcoin. And Tesla, I think, just because of what Elon's doing, I think he's had the short end of the stick. So that's pretty much, I carry on buying those ones. All right, let's just get some formalities. Oh, by the way, Axelar, remember the bridge that we always talk about, Axelar? They, I think, were the first bridge to actually build into Babylon Chain. I think Babylon's going to be quite a thing, but the markets have to recover. That's what's going to have to happen. Yes, so today and tomorrow are the 2 last days for people who open accounts on 𝗏𝗏𝗏𝗏. If you open an account on 𝗏𝗏𝗏𝗏, if you open an account on 𝗏𝗏𝗏𝗏, hold on, let's have a look here. What do you get? You get $5,000 if your user ID is called. So today and tomorrow are the last days that I'm doing this. So today we are going to draw user ID 579474164. And I'm also going to just pick another one because I just feel like it, and 𝗏𝗏𝗏𝗏 can just pay you. 845919161. If you are those people, giveaways at cryptobanter.com. If you're not, open an account on 𝗏𝗏𝗏𝗏. And tomorrow may be your lucky day. And if it's not tomorrow, it's not going to happen again, because next week, believe it or not, I might not be here for a few days. I'm actually going on vacation. I might do shows if shit happens, but otherwise I'm going to be on vacation. So I'll see you guys again tomorrow. Until then, trade well, my friends.